A big thank you to the exchange and the sponsors to on getting us involved. I think we're happy to participate in any invest education program that you guys come up with. So really glad to be here tonight. With that, I'll start with a brief intro into our group. Sunshine Holding is a holding company. We have three specific sectors that we have chosen as core, which we will concentrate, which are healthcare, consumer, and agri. And within these sectors, we have different segments. So, for example, healthcare sector, which is our core business and also the founding business of the group, has four distinct businesses inside it. So one is the pharmaceutical business where we represent foreign principals. We import and distribute up to the last mile, which is the pharmacy, all drugs and prescription medication. We are number two with a market share of about 12%, number one being HEMAS. And this has been one of the biggest contributors to the healthcare sector, accounting for about 70% of the healthcare revenue. Then comes the medical devices segment, which is about sutures, wound closures, and then devices like lab equipment and stuff like that. So every operation theater in the country has some of our products in it. So every operation will consume our products. So that's also, we have a good and wide presence in that field. Then comes HealthGuard, which is the retail part, which all of you would have seen and visited somewhere around Colombo. And then the smallest, which contribute about 2%, is the manufacturing arm, which we acquired in the latest transaction with Akbar Healthcare. Moving on to consumer, I think consumer can be divided into three distinct segments. One is tea, which is the core for that sector per se. We have big brands like Whatever the Tea, Ran Kahata, and Zesta, which dominate the market. So all three brands together account for about 50% of the branded tea market. Then the recently acquired confectionery segment, which is Dainty Limited, which has now been integrated or being integrated into the consumer business. Which operates mainly in sugar confectionery, which has about 30% market share, with one of the biggest. I think the closest is Perfetti, who is about 32% market share. Then comes the export. I think predominantly tea export. This was acquired very recently, which I'll cover later. So that business exports about 5 million kilos of tea, generates about $20 million of revenue each year in dollars. So that's the single dollar earning business in the group. Moving on to agribusiness, I think everybody knows about Whatever Plantation PLC. So this business is also listed in the exchange. Predominantly in the palm oil business, we are a grower and manufacturer of crude palm oil, and that business accounts for about 90% of the agri business revenue. The balance 10% is represented by the dairy business. So as you can see in the slide, we have about 1,800 herd, of which about 850 almost is milking at any given time, producing about 18,000 liters of fresh milk, high quality fresh milk every day. So moving on, I think just to give a quick synopsis of the history of where we come from. I think on the bottom left, you see in 1967, when the founder started the business as a small pharmacy in Gampola Kandy. And now it has been about over 55 years, and like we moved on to different entrepreneurial diversified ventures. The first one being in 1996, when the group partnered with Tata India to buy Whatever Plantation when it was privatized. And that journey has been a very lucrative and interesting one for us. Then, as a spin-off from the tea plantation, we came up with our consumer brands first, Zestar, and then whatever that they in 1998. Then, in roundabout move, going back to our roots, we established Health Guard Pharmacy in 2003. So, if you look at from 1996 to 2018, that span of those years, we have been doing a lot of like entrepreneurial diversification. But I think you can see in the chart, we've highlighted 2019 to 2022 in red. And this period specifically has been an era of focus. I think we have done a lot of strategic restructuring to really focus on those three core sectors and get out of anything that we are not interested in. So if we move on to the next slide. And like if you can skip through the animation, yeah. So in the healthcare vertical in red, you can see, I think we were present in the pharma, medical devices, and retail, which is health guard. I think what we added was the pharma manufacturing, which is a strategic business in terms of local manufacturing of pharma, which we participate in the government's ambition of healthcare security. So I think when we merged with Akbar, we inherited those manufacturing plants and which are predominantly producing inhalers, dry powder inhalers and metered-dose inhalers for respiratory issues. Then moving on to consumer, as I mentioned, we had the tea export company, Sunshine Tea, to focus on the export sector. On the agri business side, obviously, whatever plantation back in the day had both tea, palm oil, and rubber. I think what we've done is we've sold out on our tea plantation. We created a separate entity called Hatton Plantation, and then later divested it to another buyer. I think it's still trading in the stock exchange. So we are no longer in the tea plantation business, but predominantly in the palm oil business and the dairy. On energy, I think we had a small portfolio of renewable energy projects, few hydropower plants and a few rooftop solar power plants. This also was small in nature, and the strategic direction was unclear for us. So I think we divested that early during 2020 and 2021. I think Winforce, which presented earlier, bought out the rooftop energy business from us. Moving on to the next slide. Yeah, I think the tea export I mentioned. I'll skip this. This is the results slide. I think the revenue composition and the historical trend. I'll skip through this because I think this is available in our webinar presentation, which is available on YouTube and on our website. So let me skip through this to get to the, yeah. Next slide, please. Okay, so some of the key ratios in terms of investors, I think we've grown in market cap based on day before's prices. Our market cap is about 20 billion rupees. I think it was 11 billion last year, so that has grown. Our ROE has increased significantly. Our trailing 12-month ROE is at 30, almost 32. This is mainly due to the performance in the agri sector and the healthcare sector, despite some challenges in the consumer sector. In terms of valuation, we are trading at about 6.3 price earning ratio, which is trailing 12 months, which is relatively cheap compared to the market. Profitability also has been slightly lower, I think accounting in the first quarter. Mainly stemming from the crop loss in the palm oil segment, and also some margin challenges in the consumer segment, despite taking price increases. Next slide, please. I think this is where I want to spend some time and like uh, uh, elaborate. I think this is in line with the theme of the presentation as well. So just to cover some challenges we have and how we aim to address this head on. So local consumer spending is going to be a real challenge for us because our private healthcare and all the consumer segment or all caters to the local consumer except for the export business. So I think in terms of adapting to that, we've done different stuff. Obviously, we had to take price increases to match the input prices because of the dollar moving. But we've adopted different strategies in terms of pack sizes, trade schemes, and all that to make it more affordable and palatable for our consumers. And obviously, next few quarters is going to be challenging for any consumer, local consumer, unless your salary is pegged to the dollar, because like the prices have in the inflation, the inflation rate, the prices have gone up so much. I don't think anybody, most of our income hasn't gone up by that much. So everybody will be needing some adjustment, and that will trickle down to our growth negatively. Also, as a coping mechanism, we have diversified into the export business. As I mentioned to you, we did that transaction earlier this year. So we aim to explore what more can we export and how we can additionally focus on the foreign customers going forward. In terms of supply chain, first quarter and the last month has been a nightmare, both in terms of inbound and outbound logistics. As you know, mobility has been significantly impacted due to the fuel crisis. So if I was to talk about inbound logistic, tea prices have escalated. I think it's moving with the dollar as well, and also factoring in the crop losses in the tea plantation. Auction prices have like increased drastically, and although we have increased our prices of our products, we are unable to pass the entire cost to the consumer. I think we have the board has decided on a strategy of holding on to market share at a slight expense on the margin in the short term, because that market share is more valuable to us in the long term. Same goes to the dairy business. I think because of the fertilizer ban, feed for the fertilizer for the dairy business has been challenging in terms of availability and both price, and as a result has suffered slightly in terms of yield per cow. Import of pharma and medical devices and also raw materials for pharma manufacturing has been a challenge, although the banking system advised by the central bank has been given high priority to the pharmaceutical input sector, and also the Indian credit line has helped. This has been a challenge in terms of supply chain, and we have reacted by stocking up and increasing our stock holding so that we'll manage the volatility in terms of availability. And same goes to confectionery. I think the major raw materials are also imported. Availability has been a concern, and we have actually rationalized our product range to the fastest moving 80 items, so that we can focus the little available raw materials on the highest moving, highest profitable items. In terms of outbound logistics, we have our medical marketing reps and sales reps running around. So July specifically, with the fuel line spanning 3 days, there have been challenges in terms of going out and doing their job, which has eased now with the water system and the better availability. Our distributors have challenges in terms of getting our product from our warehouses to the retail store. So we have had a scheme of supplying them with diesel and encouraging them to go out and create that shelf pressure in the stores. Again, customer mobility has been a key challenge. We can make our product available in the store, but customer has been challenged in terms of getting to the store. We can especially see that in healthcare where footfall has dropped significantly. So those are major concerns. It's improving this month with the availability of fuel, but not close to normal at all. Moving on to the third and the last one, macroeconomic and policy. Macroeconomic and policy instability. I think everybody knows this. We are going through some significant, unprecedented macroeconomic challenges. Specifically, what affects our bottom line is the interest rate, because our working capital is funded from short-term funding at almost AWPLR or minus. But with the lending rates going up, we have had a significant increase in interest cost. And also, given that the price of a single pill is now almost 80% higher, the working capital requirement to maintain the same stock has also increased. So our leverage actually has increased from 16% end of last year to about 25% by the end of the quarter. Still, it's very conservative and very low, but comparatively, it's slightly higher, but nothing to worry. So we aim to maintain our leverage level at these levels by maintaining our working capital efficiently. But the balance sheet is definitely strong. We have a credit rating of I think AA minus by Fitch. So we still have a strong balance sheet which we will leverage to weather out the challenging times ahead. In terms of policy, obviously, we've gone through some policy blunders over the last few years. We are continuously, on the healthcare side, we are continuously engaging with the regulator on pricing. I think the pricing has adjusted finally through the exchange rate, and we hope that this trend will continue going forward. We are also in the palm oil side as an industry. We are engaging with the government to lift the ban on palm oil, and which will save. If it was to lift, I think it will be a plus for the country, and we will save a significant amount of foreign currency going out to import edible oil into Sri Lanka. I think the plus is the fertilizer ban, which was lifted. I think the glyphosate one is also lifted now. I think availability is slowly coming in, but obviously at a higher cost, and at the real cost, which is not subsidized. So I think it is our duty to use it efficiently and generate the best possible harvest going forward to manage that situation. So that's broadly the synopsis from my end in terms of the challenges we face and how we are going to deal with that. So I think I'll be happy to take on any questions on the Q&A session. Thank you.